Hi everybody, it's Russell Markham here from VectorVest, timing the ASX to perfection with VectorVest. I know there are investors out there that believe it's time in the market. VectorVest believes it's timing the market. We'll show you why with some very sophisticated tools. What if you could pick up good quality stocks as the market's turning and then stay out of the market as the market falls away and repeat the process time and time again? Your returns would be so much better than going up with the market and then pulling back and then going back up the market and pulling back, or would it be? And so in VectorVest, we give you the tools where you can work out exactly what works best for you. Certainly my experience using VectorVest, I much prefer to be in the market where the market's rising, and I prefer to be out of the market while the market falls, let the market fall, and wait until there's a great opportunity to jump in again. All right, so with that said, let's move myself out the way. Let's note the license numbers here. So our general advice license numbers. In addition, please note, past performance is no guarantee of future results, and we cannot take into account your personal financial circumstances. We're licensed for general advice only. Forecasts and backtests used today are intended as a guide only, and those results may be affected by known or unknown risks and uncertainties, and therefore may differ from the results achieved. With that said, I've jumped into VectorVest here, and what I'm going to do, so I'm going to put on a very powerful indicator, the MTI. All right, so this is the average of all the stocks, LICs, REITs, ETFs that we track in the market. So this gives us a very accurate snapshot as to what's going on in the market. Then what I've done here is I've overlaid this indicator here called MTI. MTI is a very sophisticated indicator on a scale of 0 to 2. It looks at the momentum taking place in the market. All right, so the direction of the market, the magnitude of that momentum in play, as well as the health of the market. And so here, for example, you can see the MTI, market timing indicator, broke above 1, stayed above 1, and the market took off. Conversely, if you go back a little bit further, during this period here, you can see the MTI broke below 1. There we are. Breaks below 1, the market pulls back. And so as an investor using VectorVest, I would wait. I'd wait. Once the turnaround occurs, I would then look to jump back in. And so what we do here, we make things easy for you because we'll give you the signals. So using our most conservative market timing signals called our confirmed signals, here it says, right, it's a good time to consider going in. Here, we note to our subscribers, it's time to be careful. Here was another little short play. It didn't last very long. It broke above 1. The market went up for a couple of days and then it rolls over. Then it comes back up and away you go. This is the power of VectorVest. Rather than hoping, that the market's going to turn around, or hoping that if I buy here, everything's going to be okay. Sure, over the longer time period, it certainly worked out. But why buy in while the market's falling? Why not wait until there's a better opportunity for when the market's doing what you want it to do? And that's what we advocate at VectorVest. We advocate buying. I'll put the camera on here for extra effect. So we advocate buying rising shares in rising markets and protecting falling shares in falling markets. So we advocate buying safe, undervalued shares rising in price in a rising market. So here we can see here is a rising market. All right, so note that date there, 1 May. So you might say, well, okay, so you advocate buying safe, undervalued shares rising in price in a rising market. So if this is the rising market, how do I find the safe, undervalued shares? And so what I'll do here on 1 May, I'll go to a tool in VectorVest called Stock Viewer, and I'll just show, let's say, the top 10. We'll just bring the top 10 stocks. And what I'm going to do here is I'm going to go back to that turning point 1 May. All right, so we'll go back. There we are, 1 May. There's the green light, noting it was a good time to consider going to the market. So let's go and have a look here. So we'll put the valuation for our stocks each and every day. So if I'll just do this to begin with. Move that out the way. So first thing, and I'll move this out the way as well. I'll just pull it out here and move it out the way. Okay, so I'm just going to simply look at the price and value, right? Price versus value, undervalued. Price versus undervalued, 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 undervalued. This one's a little bit overvalued, but neither here nor there. Undervalued, quite a bit overvalued. This one here, a little bit overvalued. This one here, nicely undervalued. So the average mix across here, it would still advocate that these stocks certainly would be undervalued on average across the 10. But nonetheless, let's take the top 5, all right? Because the top 5 is certainly undervalued at that point. So each and every day we calculate the price versus value. And again, if you take out a subscription to VectorVest, we'll give you the exact methodologies behind how we do it all. But let's see here. 1, 2, 3, 4, 5. So all of these here are undervalued. So I'm going to do this. All right, 1 May, I'm going to quick test. So this is just testing here, how these have performed. So let's say we take the top 5. All right, top 5 from 1 May through to 30 October. Let's have a look at the returns. All right, so a good 39, 35, 22, 13, and a 2.79 to give us an average return of 22%. All right, across all the stocks, LICs, REITs, and ETFs in Australia, over that time period, it rose 11% or nearly 12%. What I'll do here, let's compare this to, let's see, AXJO, right? AXJO, that's the ASX 200. All right, so this is what the ASX 200 did on average. It did 9%, but across these stocks here, it outperformed twofold at 22%. And that's all there is to it with VectorVest. We'll give you the tools. Now, so we advocate buying safe, undervalued shares, rising in price in a rising market. All right, so coming back here, here's the rising market component. All right, safe, undervalued shares. How do we know if these shares are safe? Here we can see the prices are undervalued, which often is a good precursor for whether a stock is safe. Because if you're buying severely overvalued stocks, you are taking on more risk. All right, so, would these necessarily have been safe? I can't advise you personally or give you personal advice, but what I can do is I can tell you that relative safety, this is on a scale of 0 to 2. This is a very powerful indicator in VectorVest. Relative safety looks at the consistency and reliability of companies' financials. So the higher above 1, the better. If it's got a score above 1, it means it's safer than the average stock in the database. And so here you can see very good scores well above 1. So safe, undervalued. Now, how do I know if it's rising in price? We have this indicator here called relative timing. And yes, as you probably guessed, it's also on a scale of 0 to 2. So the higher above 1, the more momentum it's got to the upside. All right, so it's telling us that these companies are rising. So safe, undervalued stocks rising in price in a rising market. So there we go. That's how we do it. So here's the undervalued component. Here's the safety component. Here is the momentum component. Overlay that against market timing. So here we are. So the market's rising. We find these safe, undervalued stocks rising in price in a rising market. And that's why effectively those returns take place. All right, so that's all there is to it. It doesn't have to be overly complicated and difficult. We make it easy for you to do. So let me go and do this exercise now. What if I were to come back to here and say, well, you know what? Let's buy these companies in a falling market. So we'll buy them on the 28th of February. And let's say we'll hold it just before the market turns, and we'll hold it through until from 28 February to around about 22 April, just before the market starts turning. How do you think that would stack up? All right, and so for argument's sake, I'll take these ones here, which we've seen have done some very good returns. But let's just take them now, and let's quick test the top 5. But this time around, instead of this date, I'll come into when the market goes down. All right, so we saw that 28 February is when the market went down. See, there's a red indicator. All right, and let's push OK, and then I'll run it until, I won't go through until October. I'll do it just before the market turns around. Right, so here we are, 28 February. So there we are. And then we'll go through, say, to 5 March for argument's sake. I'll just give it a couple of days. I'll show you why. Look at that. All right, so 28 February to 5 March, the return's not nearly as good. Even though these are very good, robust companies on average, they're struggling because the market is falling. The ASX 200, AXJO, fell 0.38%. It still managed to outperform, which was impressive in its own right, but Why buy into companies when the market is falling? And that's the whole proviso behind VectorVest. We advocate buying safe, undervalued companies rising in price in a rising market. You're going to get much better returns doing so, we've found over the years. But again, we'll give you the tools. We've got back testing tools. You might say, no, buy and hold's better. All right, well, you can certainly go ahead, use VectorVest and stress test. Do a buy and hold strategy and see what happens. Do a strategy where you're only buying the good quality stocks in a rising market, and do it time and time again over the years and test it. You be the judge. I've seen time and time again, if you buy safe, undervalued shares rising in price in a rising market, and you do it consistently over and over again, your returns are infinitely better than buy, hold, and hope type strategies with certain stocks. But again, you be the judge. Don't take my word for it. You run the testing. See what you think. Hope you got a lot out of this short presentation. Until next time, bye for now.